All right. I'll do a little recap, just like we did a few days ago. Um, I wouldn't talk about this day because it looks really obvious um, what's happening there, but I will talk about it in context. I'm trying to think of how we can do this. Okay, so what I will do is I will pull up TradingView and use that to just clear all these drawings, remove drawings. All right, so I'm going to use TradingView to um, sort of show high time frame context. As usual, we'll start with the weekly. And I don't remember, but I think I mentioned that we're probably going to target this bar. And lo and behold, we got there. Um, yeah, so this area, we have a triangle here, at least on the daily. That area has formed some sort of triangle trading range. So the market gets attracted to these areas. The areas of agreement. But if we go back to the weekly, you have a bit of a buy climax, and it looks like a second leg climax. So first leg pullback, second leg, and because it's so tight, we tend to move so far away from the moving average. So we could get a very deep pullback. This is still Tuesday, so this bar is still young, but I reckon we're going to test this low. And this is so strong already, we might get a second leg. Whether that second leg tests this low or closes this gap and tests this bar is yet, we don't know. We might, for all I know, we might even get more selling and end up down here to this low, in which case we're probably going to be sideways for some time. Daily chart. Wedge 1, 2, 3, and we broke out below the wedge. So you have that. Well, first you have a leg there, 1 pullback, 2. You could also argue, if you wanted, this is the other wedge. I'm not sure. I don't normally trade the daily. At least I don't look at it from that perspective. I'm not really sort of making any decisions based on that. But we're getting really huge bars, climatic bars, relative to what you had over here. So this is very trading range price. This is very trading rangey. In trading ranges, we tend to get big bars, climaxes that reverse every other bar. Trends tend to have smaller bars. So if you look at all the trends, small bars, ranges, big bars that keep reversing. So, all right, so let's look at the 1 hour. Again, looks like some sort of bear channel and looks like an overshoot. And what's interesting here is coming into today, you have a bit of a sell climax. Sell climaxes tend to lead to trading ranges. So instantly you're thinking the day is going to be a trading range day. And I think I mentioned this talking to my friends at the open. I said today is going to be a doji. And we formed a doji here. If we look at this chart, we formed a doji. Which, makes sense when you look at, if you look at the 5-minute chart coming into the close. I think this is where we'll go in here. Coming into yesterday's close, we started to form a very, it was a tight channel. However, you can see stop order bulls are making money. So chances are the next day is going to follow suit and we'll be in a trading range. As you know, I like to use the tick chart to just kind of confirm things. Sort of following this bear channel, a bit of an overshoot. Looks like a breakout, but look at the follow through. It's not that great, which is today. Looking at the 20,000 tick chart, 1 leg, second leg, so 2 legs down. The gaps here, there are no gaps apart from this area, but the legs are overlapping. So this leg is overlapping with this. We have this gap and we are yet to test it. Now, I'll talk about my thoughts about that later. Coming into the open, we had a bit of a wedge bottom, 1, 2, 3, right? And whenever I see that, where the market has formed a wedge like this, I tend to mark the high where the wedge started, whether this is the high or this is the high, mark this high. And this is now my target for the day, at least for longs. We kind of formed a two-legged up here, 2 legs up here. 1, pull back 2. And I thought we might get a third push here. Of course, when we opened up, that wasn't the case. Instead, you can see we had 2 legs down. We actually had a wedge bottom here. And that now started 1, pull back 2, or possibly 1, pull back 2. It's formed a triangle right now, so it's indecisive. This is a smaller time frame of that. All right, so let's go into the 5-minute chart and look at it bar by bar. All right, so the first bar, I mean, coming in today, like I said, we're probably going to have a trading range, and therefore I'm watching the 2 things. I'm watching the opening price and I'm watching the moving average. So we opened over here, and this price is important, right? The market is probably going to test this price all day. So I marked this price at the open. We formed a bull bar at the moving average. Oh yeah, we also opened at the moving average. Generally not the place I like to open at, because it means there's probably not going to be any trades over here. I need the price to create what I call a gap between the moving average and the bar. So something like this. This is a great place to take a trade when you have a gap. Because for me, whenever there's a gap, I'm not thinking whether we're trending or whether we're ranging. That gap is going to attract traders who would try and push the price back to the moving average, or at least the moving average is going to try and close that gap, one or the other. All right, so we have a bull bar with a tail on both sides. So this is a trading range bar. We get a breakout to the downside with tail at the bottom, testing yesterday's low. The second bar is telling you that there are buyers at the bottom, or at least profit taking happening at the bottom. And then we get another bar like that and a third bar. And in this bar, you can almost see we have a micro wedge with an overshoot. So right now, if you're a limit order trader, knowing that this is the Globex low, this could have been 1 leg up, a pullback, and we're probably going to test this high for a second leg, right? So if you look at it this way, 1 leg up, a pullback, testing it for a second leg. What's interesting though is, I mean, I have in hindsight it's 2020, but you can see how tight this channel is. So whatever we get is probably going to be a minor reversal. I mean, this already is that. But anyway, let's go back to this, because this is the chart we're trading. So we already have a push up, a second push, and a third push, and that forms your wedge. I'll use this one, it's easier. Okay, so 1, 2, 3, and a double top. I actually did take this long, targeted this high. I actually wanted to get out up here, but looking at the bars, you can see that the momentum you're getting isn't great. You get 2 really good bars, and then you get a pullback here. Now, when I saw that we started to pull back here, something dawned on me. This is a breakout to the downside, and we haven't tested the moving average. So there's a chance that we're going to test this low in a second leg down. Initially, I thought this would happen this way, but then I realized that, no, you need 2 legs up before we have a push back down, and that's what happened here. So you get the first leg, pull back, second leg, right? First leg, you get a pull back over here, right? Second leg, breakout, pull back. This bar actually went back to test the top. You can't actually see it, but maybe on a higher time frame you would. Let's see if you see it on 6K. Yeah, you can see it here. So you see this bar. Actually, let's use a pointer. And I always watch out for this. Breakout, pull back, second leg up, right? Even on that, as small as it is, it's always important to watch that for that. You always get 2 legs, but the second leg always happens from the moving average, or at least attempts to happen from the moving average. So whenever we get a breakout like this, a pullback to test MA, another leg up. This also went up, pull back, a second leg up. So it's always important. So say for instance you bought this or you sold this and this went down the first time, you shouldn't panic, because you're getting a second leg and then probably getting a reversal. All right, so we got that. Now you have a double top and a wedge top. It's not a great place to sell because you're at the moving average. I took the sell below this bar based on that double top. Not really a great sell signal, but I just don't like taking sells at the moving average, even with stop orders. I took this sell, targeting this low because, like I said, you're going to get a second leg down. Remember, the Globex high is up here. The market went all the way up, broke out to the downside, pulled back 50% for a second leg down. So taking this down all the way down here, you could target this low. Coming down here is actually a bonus in my opinion. Normally it doesn't usually happen. I mean, what do I know? This now is a double bottom with a Globex low, right? So one low, second low. So you have a double bottom. So ideally you're going to come back and test this high since you have a double bottom, right? So you're going to get two legs up this way, and that's literally what's happened here. Actually, you actually tested the low again. But anyway, that was during the FOMC, not FOMC, Powell speaking. All right, so now we have a lower low double bottom, right? And potentially a wedge bottom with yesterday's low, right? So right now, the top of that wedge is here. So this is your target, right? So you can now buy above a bull bar closing on its high. This is a good buy. Put your stop down here, and you're targeting this high because that's the top of where this wedge started. So I would mark here to here, and that's that. Let's change this color to blue so we don't confuse it with our target. Okay, so that's the opening price. Now, what is so cool about our way going up? What's so cool about this is how we get up there, right? So you have a first pullback, second leg. You know, normally we get a trading range, so it's a transition. It's usually a triangle, right? So you get one little triangle that's always formed whenever we're rotating. Something I always look out for, a rotation triangle. Sometimes we get a test and final flag, but this already looks like a wedge. And I always say, well, we're forming a triangle, so therefore this low will be tested, this high will be tested, and then we break out. So this is the breakout, pullback, second leg, pullback, final leg. But it's a small pullback bull trend, really small tight channel. So you can see we're doing that. And whenever that happens, there's always an alarm that goes in my head. Oh, small pullback bull trend, first reversal will probably be minor. We get a buy climax, hits our target, and then we get a massive surge of profit taking. Also a failed breakout of the 60 MA, the moving average on the 15-minute time frame. And then we get a break here. I remember taking this short here. I hesitated taking it short here. I ended up taking it short here. And the reason why I hesitated was because I'm trying to stick to just taking stops below bars. But it's a trading range and it doesn't usually work very well. You don't get really good entries. This also is an overshoot in a range day. This is probably a good sell, and it's also hit the target. You could take a sell here, very low risk. Now the question is, where are you going? You want to target this low. All right, so what do we get? Because the first reversal is minor, we should, and this is a tight channel, we'll probably get another leg up, maybe to 50%, which is what's happened here. So a nice breakout, and then get another nice wedge top, micro wedge. You get a second leg down. There, so two legs up, one, pull back, two, almost an expanding triangle. Right, so this is a lower low, lower high, or high, yeah, lower high, double top. So it's probably a major trend reversal. And so it's the first leg, pull back. So 1, 2, down, right? Or 1, 2, and then 1, 2, right? But this looks like a channel that looks like this. Okay, so anyway, so we have the first leg, second leg, and then coming down, and then we get a breakout to the downside. As you can see, there's a little tight range over here. Not much is happening. This can be very frustrating, and you need to be aware of what the market is trying to do. Again, a little triangle, right? Just like we had over here. 3 tops, 1, 2, 3, and 3 bottoms, 1, 2, 3. Breakout to the downside. This is when the Powell started to speak. A lot of volatility. We test the low, 2 legs down. At the time, I wasn't very sure because I was very confused here. And I didn't really see what was going on. But if you were selling this and you decide to sell this low, you would obviously try and target down here, and your stop will be up here. This is your entry below here. You could also use some limit orders to enter here. This is actually a better entry because you have 2 legs up within this. Your initial stop is here. You probably, I'll probably still keep my stop here, but this is a good bar. First leg, pull back, second leg. And once we get here, look at what happened. This becomes a second leg trap. And we now have a bigger wedge, or another wedge. 1, 2, and 3. So where's that going to go? Well, initial target is going to be the top here, but possibly this high. And of course, it gets to the Globex high. And remember why, when we said Tesla this low, maybe this high will be a target. And that actually, this low, this high is the target. So you have down, up, down, and therefore we're going back to where we started, 1, 2, as a trading range. At least that's the way I see it. All right, so where would you buy? Unless you're using a limit order to buy this low, and if you are, it's best to use a wide stop. A stop would probably be about the size of this range. So you probably put a stop down here, just in case we break out and form another range here. And you would have to buy that low. So you'd have to put a stop down here. All right. First leg up, pull back. No good bars for stop entries. None at all. This is probably the only good bar, because the only one that closes on its high and closes above the moving average. And this is the problem with trading ranges. You don't get many good stop entries. Like, this is probably a great entry over here somewhere, but you don't know. I mean, you could buy it, but you need a wide stop. This is the only one I could buy. Put a stop down here. I'll probably go for 1-to-1. So say I bought above this bar. Whoopsie, using the wrong. I will probably get out somewhere up here. Right. All right, we get a buy climax and probably a second leg trap. So first leg, pull back, second leg. So this in itself is a wedge top. 1, 2, and 3. And testing a new area. And then, of course, we're going to get sellers. All right, some profit taking, which led to a nice sell signal over here. Stop up here. I don't know, maybe we might want to go for 1-to-1. I don't like big bars because probability of getting 1-to-1 is very little, but this one actually worked out. But again, you're at the top of the range. It didn't close at the moving average. It closed slightly above. You need a very wide stop, about 15 points high, and you get down here. All right. You could say there's a micro wedge in here. 3 pushes, 1, 2, 3. So this in itself is a wedge. You could also argue that you got a wedge 1, 2, maybe 3. Micro triangle. Well, you can't see any triangles here, but anyway, you could buy this high, but you need a stop down here or down here. You get a first leg and then a breakout, which becomes a buy climax with a bad follow through. So this is the wedge. You get a pullback and a second leg. I actually took a sell early on this one, only just because, the way I saw it was, we're closing. Well, did we close this gap? We did not. No, that's interesting. I didn't look at it that way. I looked at it as the fact that there was enough selling in here for us to sell higher, right? But of course, I used a wide stop. Very bad follow through by the bulls here. This is a actually credible buy. Actually, I did buy this bar, targeted this high, but just took my profits at this point. Now, what's interesting here is look at this. The bulls who bought this high, they got out break even, exactly to the tick. You got a big bar. I did sell the pullback. I sold this bar and got out at its low, just down here. 1 pullback, 2 at the moving average there. Again, one of the great things I love about trading ranges is the exchange you always have at the moving average. The fact that whenever you get a breakout, there's always a pull and a second leg. So you may ask, what happened here? This was very tricky. You can see it here. It's actually a lot clearer in the tick. So you get the breakout, the pullback, and the second leg down. It happens so quickly in just these 2 bars here. So every time, say I've bought, it's something I now do whenever I sell. Let's say I sold the lowest price here. I wait till we get to the moving average and I sell the moving average, and I know we're going to try and get back and test this area. It's a pretty good, reliable strategy. Whenever you say you buy up there, wait till we get back after the first break, and you bought here, pull back to the moving average, the second leg you can get out most of the time at break even. profit there. It's something you should definitely try out. All right. And then we now make 2 legs down, and that's where everything ended. So it was a pretty straightforward range day. But of course, you need to be very aware of what the market is doing at all times. It always looks confusing, especially when you say you take a sell here, you see this, comes down, you're expecting it to go down. But of course, small pullback bull trend, first reversal, probably minor. We'll try and test this high, forms a triangle. The triangles are there. You have to be aware of them. A lot of the times you see this happening, you're thinking it's going to go up and, carry on because it's holding the moving average. But sometimes it will fail and you can always sell again. All right. Hopefully this was helpful.